Good afternoon, everybody. Today is Monday, the 30th of January, 2012. This is Brian Shannon speaking from Alphatrends. Let's take a look at this market here. And the S&P 500, as we know, last week got up and came up to that level from the gap lower right before the U.S. debt downgrade. And we were looking at it as a potential level of resistance. It has so far been the biggest area of resistance, I guess you would say, for this market over the last couple of weeks. But really no damage done to the overall uptrend that we continue to be in. Looking at a normal pullback so far is the way we want to view this. But we broke below the 10-day moving average, and we broke below that. What's been the essence of trend, that trend line as well. And here we are, kind of still flirting with this key level that we were talking about in this area near about 130.75. We're below a decline. A 5-day moving average is actually kind of flattening out here. So it's tough to say that the market's actually broken down, but we do objectively have lower highs and lower lows here. So it tells us that we're in this possible distribution and maybe going to see a little bit further weakness. It wouldn't be unwelcome or unheard of after the magnitude of the rally we've had. We came pretty close to that advancing 20-day moving average in here today, and that was something that a lot of people had their eyes on, and we've got some important levels just below in here as well. If you take a look at, just about that 130 area. So I don't think that we're headed for a big sell-off, but perhaps a little bit more consolidation through time. And this is Monday, so of course this is Realtic who is providing this information to you and allowing you to see it on a non-subscriber's access to the Alpha Trends each day that we provide this information. But Realtic is the sponsor here today. I would encourage you to take a look at their site and take the Realtic platform out for a test drive. There's a lot of brokerage firms that support Realtic, and many of them are very good brokerage firms to be with. Back to the S&P 500 though, you can kind of look at this right now as the light went from green to yellow, and breaking back below today's lows would be reason for a little bit of concern and think that maybe a deeper pullback would take place. It really could even get down as low as maybe about 128 without really being an issue. I think that first the October highs near about 129.5 would make sense, and that's about where we see that 20-day moving average is 129.74. You can see that in the bottom left corner. So I don't think we're due for a major sell-off here, but just got to stay on your toes. The good news is that we had that green candle, and what that means basically is we gapped lower, sold off a little bit, but then the buyers took control, and you can see here that we spent just about the majority of the session above the volume weighted average price. After that first hour, when the market retook that volume weighted average price and broke this little downtrend, it was net buyers here at the end of the day. So the average person who participated on the long side was a winner, average loser, short was a losing position. But we're in this area where we have the potential for it to back away, so I have to be careful tomorrow. The Nasdaq was the relative strength winner, and the winner here today, as it was up a nickel, continuing to hold out. This market gap down below that first level of support, and it didn't hold below that level. We were looking at 59.5 to basically 59.75 as the key level of support. We got in there for a brief period, but the buyers came in here quite strong, and this Nasdaq has been the relative strength leader lately. If we take a look at that 30-minute time frame, we can see we've got this trend line that's kind of represented the essence of trend, which is still intact. The bigger level of concern for this week would be down near about 59.40, 59 and a half. So if we were to get below that level, then I think that the Nasdaq would be due for a deeper pullback, perhaps down to the 20-day moving average, and just dropping back into this little range, even down towards the 59 and a half. As we know, this market has made a new high for the several past years, decade high or so, and it's holding up well. So you have to be impressed with that strength and the fact that the buyers came in so quickly here today. So still a little bit neutral in the near term though, and but constructive on the daily time frame. And the Russell 2000 was down about 3/4 of a percentage point today, but you can see here in this daily chart we're still in really good shape here on the daily time frame. I think the bigger level would be close to this 77 area, which was a little bit of resistance, and as we know, we've got that 200-day moving average now at about 76. But that this 77 has been a bigger level in the past, so clearly we want to see if we do pull back that 77 would be the key level for this market to hold. We've still got this uptrend line that's intact. It's being tested more frequently, and that usually occurs before it would break down. But again, we've got this market holding above key levels, or get it, just dropping below that key level for a very short period of time before the buyers came back in and took control. So it still remains constructive, but maybe just getting a little bit more neutral in here. The semiconductors, as we know, had a great week last week and have been a big winner this year. They got up to last week's high was right up near an important prior level. The bigger level of support, would be this October highs, and then of course we had as we know, the 32 level was a big level. So 32 to 32 and a half really is the bigger level of support that we want to see the semiconductors hold. We gap down, and we're kind of stuck below this little level here. We're right at really at 3350 level, and has the potential maybe to break down a little bit further. This market, as we know, has been holding up much better, so even a pullback down towards 32 and a half wouldn't be unhealthy for this market. It wouldn't ruin the uptrend by any means, and it would be a nice pause maybe that would refresh, finding some support at a rising 20-day moving average as that 20-day moving average comes up to meet it near that 32 and a half level as well. The financials, 1395 was our important level that we were going to watch this week. That's been pretty easily broadcast by this market as far as prior resistance becoming support in here. We spent a good portion of the day below that level, and we do have this little pattern of lower highs and lower lows with a declining 5-day moving average. So only because we have a very strong looking daily chart, I would say you don't want to get aggressively short in here. But as we know, we got up just beyond that 1420 level. We're still holding the 200-day moving average, so it's still constructive on the longer term basis. But near term, we just have to maintain a little bit of objectiveness and be prepared for maybe another day or two of profit taking before this market would have the opportunity to refresh and move higher again. But all in all, you still have to be impressed with the way the market holds up, and just near term a little bit more cautiousness.